Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased technical analysis. Now this is a 15-minute chart here of the S&P 500 and as you can see we had another choppy day. As a matter of fact, we've had a lot of chop these last couple of weeks, okay? Almost. However, I have a feeling, not the feeling, but there's the market, the charts are showing signs of a rollover to the downside, and I'm going to talk about that. And I know we have CPI tomorrow, and if the market does drop, CPI is most likely going to get the credit for it, okay? But that's not 100%. We don't know for sure if the market's going to drop. I just want to keep this about technical analysis. Okay, guys, there's a lot of other YouTube channels that talk about the news and stuff like that. Definitely go check them out. But if you're here with Uncle, I just do unbiased technical analysis. Okay, so here's the daily chart of the SPY. Okay, here's what I want to talk about, why it looked like the market may be rolling over a little bit. Okay, you guys see this red line here? That is my 5-day moving average. Now, I made an educational video about how you can trade like my nephew, the Charters, okay? Because I'm Uncle Charters, the Charters, different person. But he made a video about how to trade like him, and it was a really good video about technical analysis. And one of the things he talked about in his video was the power of the 5-day moving average. Okay, if you watch till the end of the video or you skip towards the end of this video, the video that I'm talking about, the educational video on how to trade like the Charters, it pops up, okay? So you can definitely check it out. Also, the link's in the description below, okay? But he talks about the power of the 5-day moving average, all right? Now, here's what I want to say. In strong uptrends, right? If we go stroll back a little bit, you can see in strong uptrends, the price spends a lot of time above the 5-day moving average, okay? There are times where it closes below, but you always got to watch out for the recapture. Okay, because false breakdowns are bullish, okay? And that's what the point of my channel is identifying trade setups for us to trade. Not predictions, trade setups for us to trade. So, you see the price spends a lot of time above the 5-day moving average on up moves, okay? Then we have some down moves, all right? When we have the down move, the first support, I guess you could say, that fails, is usually the 5-day moving average. Is it always the case? Of course not. There are times where we break below the 5-day moving average and it recaptures. If it recaptures, that's your trade setup to enter calls or bet to the upside. Okay? It's all about trade setups, guys, not predictions. So basically what I'm saying, price spends a lot of time above the 5-day moving average. That's bullish. Price goes below the 5-day moving average. That's usually a sign or a bearish warning. Does that make sense? So I'm looking at this right now, guys. I'm looking at the SPY, the most current price that we got, which is right here. And what happened today? We closed below the 5-day moving average. Okay? And I'll even bring you back to June. Yeah, we had a couple of closes below the 5-day moving average, but like I said earlier, got to watch out for the recapture. But when it does not recapture, look what happened back on June 8th. Did not recapture and continue dropping. All right. Right now, the reason why I want to bring this up is the question of today's video. Is this a sign of the market rolling over? Usually, the first sign is losing that 5-day moving average. Okay. Now, if CPI comes out tomorrow and its data or the data is like worse than expected or whatever the case may be, this could push the market down even further. And like I always say, watch that 407 level. Because if 407 fails, look for puts. That's a trade idea right there, guys. Okay? But with this loss of the 5-day moving average, that is the first sign of the market rolling over. It doesn't mean it's going to drop big to the downside, but it's usually a sign that it's at the very least going to pull back to a critical support level. Okay? So, 5-day moving average, it's currently at 413.29. That aligns with my 413 resistance anyways. Obviously, like I always say, I long breakouts of resistance and I short failures of support. So if that 413 level is recaptured, not only is that based on one of my levels, but that's also based on the 5-day moving average. Look for calls if SPY can get back above 413. All right, as long as below this 5-day moving average, and if the price stays below it, the 5-day could possibly curl to the downside starting tomorrow, okay? But as long as below it, that is not bullish, guys. All right, these are how you detect the early signs of a down move. Not being biased, just watching the charts. And that's what I use, 5-day moving average. So if SPY cannot recapture this moving average tomorrow, which is at 413-ish, stay bearish. If it does, look for calls, target 415 and 416.5, maybe even higher than that. I play it level to level, okay? But as long as below, we could still see more downside. I have a support here at 410 to 410.5-ish. We got a bunch of bounces off that today. That's my green line right here. The 410 to 410.5 is level. If that fails, 408.5, and then the very critical level of 407 is below that. Guys, if 407 fails, look for puts. That's going to be a great move. I have a feeling. And if I'm wrong, well, cut your loss. Okay, guys? I'm not a financial advisor. Keep in mind, I'm only saying this because that's what I plan to do. All right? If you want to copy Uncle Charters, that's up to you. I'm not giving you, I'm not telling you what to do. It's up to you. I'm just telling you what I'm doing, and I will short 407 if it fails. And right now, it's looking bearish while it's below the 5-day moving average. If 413 is recaptured tomorrow, I will buy calls, guys. I don't care what CPI says. I don't care what the news says. I don't care what Michael Blurry says. I don't care. I don't even care what Joe Schmo says. And you know what I mean by Joe Schmo, not the random person, the other guy. I don't care what they say. I'm gonna buy calls if 413 is recaptured. I'm gonna buy puts if 407 fails. I am a price action trader, and I'm a day trader, and I speak from that perspective, okay? This is for short-term analysis, guys. Day trading, all right? So you got my levels, you guys got my plans, and you guys got my theory, my thesis, if you will. As long as below the 5-day moving average, we could see more downside. Above the 5-day moving average, which means above 413, could possibly see a little more upside, 415, 416.5 of the next levels above. Okay, guys? So I'm going to move on to the QQQ. Now, here's another one. QQQ closed below the 5-day moving average as well. Okay? And while below the 5-day moving, I actually dropped down to my 315.5-inch level. Okay, I'm going to scroll to the left. This 315.5-inch level is based on my 38.2 retracement level. Okay? From the March 2020 low to the November high. Okay? So if 315.5 is lost tomorrow, guys, look for puts. Short the breakdown of that critical support level. All right? You don't have to, but that's what I plan to do. All right? I got resistant around 320, and then I'm also watching that 5-day moving average, which is around 321.3-ish. If we can recapture that level, that puts 322.5 in play. Above 322.5, I'm bullish. Putting 325 and 329.7 back in play. Okay, guys, you got my resistance levels for QQQ. Long the breakouts is what I plan to do. You got my support for QQQ. Short the failure of support is what I plan to do. Don't mean to rhyme, but it just did. Okay, what else I want to talk about? Tesla. I talked to you guys about Tesla. I always talk to you guys about Tesla, but I've been bearish on Tesla. Today, we lost a very critical level at 858. All right, this 858 level is very critical because, Tesla has been in a downtrend since November of last year, and I got my fib level started from there all the way down to the May low. All right, that 858 level is based on my 38.2 retracement level, and we lost it. We was able to bounce off this orange trend line right here that I got. That was based on a previous high back in July 22nd, around 842-ish. Okay, and we bounced there. So this is my plan for Tesla tomorrow. If it recaptures 858, look for calls. All right, I'll be targeting 887, then possibly 902, and maybe even the 200-day moving average, which is around 910 again. Okay, but no calls unless 858 is recaptured. Take profits where you feel like it. Okay. Now the support is at 842. If that support fails, I will look for puts and I will target even lower. Okay. So that's what I have for you guys today as far as technical analysis on the chart goes, unbiased technical analysis. And one last thing I want to talk is the flow sentiment. This is filtered for 500K premiums or above. This is for SPY, 78% in the puts, 22% in the calls. So big money, the whales, I guess you can call them, are still Bearish triple Q. How's triple Q looking? 70% in the puts, 30% in the calls. So similar to the SPY. And then there is Tesla. Okay, so 53% in the calls, 47% in the puts. Either way, we still want to watch if 858 is recaptured before we entered calls. 842 fails, look for puts. Okay, guys, those are my trade setups. Those are my trade ideas. I hope you guys like it. And if you guys want more content from Uncle Charters, you want to get the best analysis from me, you know, because talking about it on YouTube after the market already closes is one thing, but to trade in real time is a whole nother animal. And if you need the extra help, please consider joining my Discord. Okay, guys, like today, 412 failed, putting 410 to 410.5 zone in play. Okay, we was able to catch a nice level to level move on SPY. You know, that's just one example. Okay, guys, so thank you for watching. Peace.